Hello guys, sorry to have been a little late. So today we try to see a new subject, which is how to follow stock trends. Okay, so I'll be just waiting for a few minutes when the guys comes. Hello wise man, how are you? Good evening. Hello. So the subject of today is the heart of swing trading. It means the subject of following the trends is what we do and is how we make money in the stock market. Okay, these big moves in the market makes a lot of money for people who follow trends. Okay, so if we compare, for example, investors with swing traders or short-term traders, you find that the only real difference in terms of price is that swing traders follow the trend when the stock is moving so fast through time, but when the stock is going down into a downtrend, the swing traders, they exit this trade. Either they go down with it or they find other stocks. Okay, this is how it works in the stock market, and this is how a lot of people make money from following trends. Now in general, they say that the stocks, they don't trend, they trend only 30% or 40%. This is for the general market, but it's not for the majority of stocks. The majority of stocks, they trend, okay, and for a long time. And we have seen before, I have shown before a lot of trends, a lot of industries that they have a long, very long trends, even 2 years, 2 years a trend. Okay, there are some trends that are so big, and the market continues to go up, and people, they wait and they wait and they wait, especially for those who are beginners. They don't want to take to get in when the trend is small, okay, because they are scared. They want confirmation, they want other people to talk about it, they want to go to let's say to some forums or chat rooms or TV, and they talk about these good stocks, and then when they are confident, they want to buy. Now the problem is that if you buy at the end, you will not going to make a lot of money. Okay, this is first, and most of the time you are at the end, because Wall Street guys, analysts, they begin to advertise when the trend has ended. Okay, so how do we know? It's just, we know because when they begin to talk about, they will begin to talk about stock, the stock will be going down in a few days. Yes, in those days it will not see, and no one sees that, because all the public are buying. And this is the most important thing that I want to talk in this session, is that people, they don't understand how the market works in terms of money. It means this is what we call hello Nasa, how are you? This is what we call interest. Okay, interest, it means each people online, especially analysts, especially TV, when they talk about something, it means behind it there is someone or many guys behind it. Okay, if they ask you to buy, it means most of the time they are selling. Yes, as Nasa said, everybody has an agenda. Yes, it's true. This is from the beginning of the stock market until now. Okay, it's the same thing. There are interests in the market. The market, it means what you see in TV is not naive. They don't give you advice. It means they advise you to buy something, or they advise you to hold something, or they advise you to sell something. There is a reason behind. Okay? Hello, Trump. Trump is always having questions. So let's just begin the session. So let's say Trump. What did he say? He said, "Hi, swing trading is a failure because one day of correction can erase 1 month of profit. I will feel good with day trading when set up, and quality stocks controlling my position." You are wrong. You are wrong, because I make money since 2010, 8 years, with swing trading, and I don't do day trading. Don't compare, let's say what they say, don't compare apples with tomato. Okay? So to make you understand, you say to control my position. We control our position also. That's why we use a stop loss. Okay? If you leave your position without stop loss, you will be burned one day. Not always, but one day you will be burned. So Trump, day trading is a style. It has techniques. If you are a day trader, okay, it is a choice, because you like actions. You want to get up early in the morning, you find the news, you find the stuff, you find volume, you find a lot of things that can help you find stocks and see the mood of the day. But we are seeing the mood of the whole trend, which is so different. Okay? So don't compare day trading with swing trading in terms of failure or not failure. There are millions of people who are day traders. This is what they like, this is what they do, and they have time in the morning, they have capital to use, okay? They use techniques for many years. And there is another style which is called swing trading, which is totally different. Other different people, okay? Now for you, I'm telling you something. Have you ever seen a gap app? No. Since you are a day trader, you will never see it. But we will see it. I buy a stock at 78. Tomorrow is 135. Okay? Trump, this, you will never see it. You will never double your money in a day or two. You will never see this in day trading. That's why it's totally different. So if you are speaking about swing trading, try to concentrate on swing trading as or short-term trading as a subject. We are not talking about to talk about day trading today. Okay? So keep your questions about swing trading. And since you say a failure because the correction can erase 1 month, this is for investors, not for us. I'm telling you, Before the correction comes, I have made a live video. You can check it online. It's a proof. I say there should be what we call a correction or a crash, because I see many years. I see January which is not doing good. That's why always I put stop loss. I exit some trades and I short for 2 weeks or the third week, and then when the market has gone good again, I exit those trades and I begin going long. Okay, so it depends what you are doing. If you don't know to do swing trading, yes, you will lose. Even as a day trader, you will lose. You will lose as a swing trader, and you will lose as an investor, because you don't know how to do it. Okay, and this is for all the things. Now let's see J Files. What did he say? He says swing trading is a failure. Oh, there is another guy. No, if you set your stop loss, how can you wipe out a month's worth of... Yes. J Files, yes, you are right. I'm just trying to explain to him, because explain to him how the swing trade works. For me, it's from the beginning, when I feel the market in January is not doing good, because it was doing so good that I have a feeling that it is not normal. That's why I prepare myself. But I am always prepared because I use a stop loss. I will never let a stock without stop loss for 2 weeks until I get all the correction, and then I hope that the stock market will go up. I'm telling you before that I don't believe in prediction. It means I will say tomorrow the stock market will be up or down. I would never do that, because I use probabilities in my trades. And it is so different from what you know. Okay? So, let's go. Thank you, J Files. Let's go to Wiseman. He said, I know someone at my church that makes money swing trading. Yes. If, see, I'm telling you, Wiseman. Last month, I taught someone who is working in a church. As if you are talking about me. Okay? No, someone from church, or someone from the hospital, or someone who is in the army, or someone who is a doctor, whatever. It is just an activity that people, they want to make more money. They want to understand how this work, how this is what we call swing trading work, and they want to make money from the trends that are in the market. Okay, whatever is your job. Okay, so this swing trading and investing or day trading, it has nothing to do with your job. It is a business that it is separate. You can open an account. You work part-time or you work full-time. It's your problem. Okay, and you begin working. You begin understanding what's going on, and when you understand and you have good strategy, and then you can begin making money. Okay, when you understand, because at the beginning, it's all confused, like Trump said. Okay. NASA said brokers love day traders. Yes, day traders. If you are going to trade a lot, it means to trade daily, you should have $25,000. So your broker will have a big part of your earnings or your profits, if you are making profits. Now, you should have more than $25,000 in order to trade daily. If you have less, the broker will stop you, because this is called a day trader pattern, and they will stop you because you do more than three trades in 5 days. Okay, in 5 days you do 3. The fourth one, they will stop you and flag your account. Now, Trump said swing trading is only for beginners. For beginners, no, man. You have false IDs. Although you have been with us 1 month or two, you have been in my swing trading, but you seem maybe you have done 1 trade or 2 or 3 and you lose because typically you don't know how to trade. You have problems with trading. That's why you try to generalize. Okay. Hello, Up Adventure. How are you? I know, I see you. I just I was just trying to answer Trump on his questions. So swing trading is a style. It has nothing to do with beginners or with professional or whatever. We follow trends and we make the money when the market is moving good for some stocks. That's it. If you are an investor, you can see trends up, trends down, and you are staying. You stay because you believe in the company that it is doing better than the other companies. That's why you stay. This is investing. Now, in swing trading, we buy when the stock has begun to move. Okay? We don't buy when the stock is slipping. That's the thing. So J-File said swing traders are for advanced level traders. Investing is for new people. Yes, investing for new people, it means you buy stocks, you buy companies, and most of the people, they don't know these companies. They just invest. They hear in TV or they hear in some other place, and they told them, okay, this company is good, buy it. They give them reasons why. Okay, but since the beginner doesn't know these things, are they good or bad, you just take the advice. But some people, they lose a lot of money sometimes when the market is not good, and they just buy. They don't know what they are buying. The stocks going down. Sometimes some stocks, they go bankruptcy, and companies, they go bankrupt. It means they lose all their money, so they don't know. Now, so NASA said day trading is harder because you are competing for few cents against professionals. Yes, this is true. NASA said day trading is harder because you are competing for few cents against professionals. Yes, when you are day trading, you are facing all the professionals who play with the stock, sometimes 10 minutes or 20 minutes down, and then they put it up. Then they can put it down. So most of the beginners, they don't know what is the direction of the day. Because in stock market, there is only one direction of the stock. Okay? Either it goes up, it goes down. But it doesn't mean that the stock will go up at the first minutes, 9:30 a.m. The stock is going up and that's it. Or tomorrow the stock is going down and it's going down. No, it goes up, it goes down, it goes up, it goes down. And at the end, you will see if it is up or it is down. So if you don't have good techniques, excellent techniques, if you don't have what we call practice, a lot of practice, many years, and if you don't have money, like more than $25,000, because you will day trade each day. Okay, those who don't like stocks, you can go to forex or futures where there is no this data pattern trader. There is no. If someone wants, he has only 10,000 or 5,000, he can go to forex. He can go to futures or options, and he will do whatever he wants because there is no this day pattern. Day pattern trader is only in stocks. Okay. Now, Wiseman said, Trump, do what you're comfortable with, but I am into learning swing trading. If it was interested in day trading, I wouldn't be on this live chat. Yes, thank you, Wiseman. No, it means, see, I sometimes give information about day trading. I have a training about day trading, about shorting stocks. Now, for those who are interested in that. But in general, my channel, all what you do is about swing trading. It means short-term trading. We are not interested that much to investing or to day trading. That's why if someone likes day trading too much, okay, he can just take my training and ask questions later. G-File said, do you swing trade as a full-time job? Yes. But understand, full-time job for me, for swing trading, is just to check daily, at the end of the day, my stocks where they are. If one, I exit with a profit or with a loss, I change it. I search, like from 3 o'clock to 4 o'clock, I search, I find stock, and I replace the other stocks. That's it what I do, but it's not always. Sometimes there are many days I don't do nothing. It's just at 3:30 or 3 o'clock, I look at my stocks. If they're doing good, that's it. Okay? There are some adjustments when I adjust the exit point for some stocks that they have profits on. I adjust those things. But it's not daily. It could be once a week. It could be once 2 weeks. Depend on each stock. So, Rada say, never win day trade. Your opinion? Never win day trader? Your opinion? Well, so, Rada, what do you mean by never win day trade? Day trader, your opinions, please. So what do you mean by that? I don't understand your question. Javid Iqbal, how are you? Thank you very much for coming. Chris Guzman, good evening, Karim. Yes, where are you, Chris? It's a long time I haven't seen you. Even in Facebook, I haven't seen you. Okay. Betullo Racing 1. When is the best time to buy stocks? Okay. Betullo Racing, we have techniques by search. Okay? You can if you want to learn how to search, you can subscribe to my subscription. It's only $25 a month. There are 4 training for free, and there is a weekly search, and I will teach you how to search for stocks. This is the best I can do. But here in this live session, I don't give training for free. Okay, I don't give where to buy, where to sell. So here we are talking just about general subjects like how to follow the trends for today. So Rada, you can. This is my website. Okay, and okay. So this is my website and my email. Okay. So please, Rada, go to it, check. Either you can the first training is free. If you want first training, in my website it's free. Just get it, and then if you like it, you can continue with the subscription, or you buy the training itself, how to search for stocks using Stock Screen. Okay. Now, Betullo Racing, you see my email, you see my website. Just go to my website. If you are confused, please take my email. It's right now here, istockmoney@yahoo.com, and send me an email. I will help you understand the thing. Okay. Now, just for YouTube, hello Karim, how are you? I am fine, thank you very much. I haven't seen you for many times, for many Saturdays, just for YouTube, because I see you always. Trump, are you live in Facebook? Oh no, no, I don't do live on Facebook, since I am here on YouTube. I'm doing here on YouTube because all my followers are on YouTube, so I don't do on Facebook. But you can find a link You can find a link and you can join us wherever you want. Thank you, Betullo Racing. So, since we are speaking about trends, let's see. Right now, I will go and explain what is a trend. At least those people who are watching, who are new here or who have never seen what is a trend, we will see that. Okay, so let's go to see that. Okay. Now let's see. The stock is $20 here, as you can see, and this is the beginning of the trend. The trend goes like this. Okay. Now today, just an example. Let's say today is 24 February 2018. Let's say you buy a stock at $20. After, let's say, 6 months, it goes to, let's say, to 55 or 60. Let's say 60 is better. Okay. Now this is when the stock is going up. This is called, just for those who don't know, is called an uptrend. An uptrend meaning that the stock has been going up from $20, it goes to 60. Now, how many months? Here we say, let's say it is June, which is 6, and let's say it's the same day, 24th, 2018. Okay, so this is the trend. So here, from February to June, okay, so this is 5 months. Okay, 5 months. This is the uptrend. Now, as swing traders, we are following a trend like this for 5 months. Now, the stock then most of the time it has another trend down, okay, in 1 month or two. This is what Trump has said. He said that you will be having a stock all time, and then the correction comes, or the crash comes to this stock, and you lose money. You lose all this. No, we don't lose because we exit. We exit on time. Now you tell me, how do you exit? We have techniques. Okay, we use techniques to assess when the stock is going up into an uptrend. We try to assess where to exit with profit. Now this, you will never find it in, let's say, in investing or in day trading, because day trading, if day here, it goes, for example, 25 cents. This is what the day trader takes. The other here, 25 cents. Here it is 60 cents. Here is 5 cents. Here is a loser. This is what the day trader do. Okay? So we are not, this is day trading. How to make money in day trading. Okay? So you take each day and you make money. Swing trading, okay? Swing trading is we follow the trend. Okay? Just an example. Okay? We follow the whole trend in order to make all this money. All what you see will, from 20, for example, to 60, Okay, this is a 300% profit. This is what we are looking for. We are not looking for to make 25 cents a day and tomorrow we lose it and the other is I don't know where, and it's the days are as you can see are always volatile. Okay, so this is for the trend. Let's speak a little bit and then we can go to another thing. Okay, so hello James Armstrong, thank you for coming. So as I told you, since we are following trends, we are following trends because the stocks, each company is not always going up. Okay, sometimes this stock, we take just an example. Okay, I will give you just an example. Hello Michael Martin, it's a long time I haven't seen you. James Armstrong and Michael, and Chris de Guzman. There are a lot of people I haven't seen for a long time. Okay, so a stock is like a human being. Sometimes it is sleeping, then the stock wakes up, then it's walking, and then it's running, and then slow down, then go to sleep again. Okay? So the stock is doing the same through the years. For us, what is our job as a swing traders? We try to spot the stock when it is at the beginning of the trend. We are not buying the stock when it is at the end. And this is what the beginners do. So I will give you now an example of what happened in the media, because you don't understand. When the stock is going up, no one is talking about it. The analysts and what we call the TVs or the most influential people on the business, they don't talk about something is going up because it's hidden. Okay, so let's I give you an example just to show you how this thing work. Okay, so let's say here. Okay, so we get the same example. Okay, the stock is 20. Okay, now it's going up to 60. We take the same example, okay, just to show you. Now the stock stops and it's heading down. Now here I will give you an example. Okay, in this time, let's say the stock here is, I just explained to you how this work in terms of changing money. When the stock is 55, so the analysts, okay, or TV guys, TV gurus, or those who have an interest, okay, these TV gurus, analysts, all the media, it means the media, they begin to talk about this good stock, how it is so good. And they say, for example, that this stock has made 250% profit. So this is what they tell here in this period. Let's say it is 5 months and a half and 15 days. Okay, this is what they begin here. They begin to talk. Now, what do you think when the people talk? There is what we call the public who is listening. the public, or they are called the crowd. What does it mean, the crowd? It means people who follow, okay, without knowing anything about what's happening, without knowing, okay, without knowing what is going on. Sorry for the handwriting, okay? So, in this situation, what do you think? What do you think the public or this crowd will do? Because whenever they open their TV, or they switch on their TV, or Facebook, or the media, or the guru that they follow, they try to influence people and saying that this stock is the best stock of the stock market. So what is the reaction? The reaction of these people, what they do? They just go and buy blindly. They buy because they see it's 250%. There is a proof that this stock is doing good. 250% profit. So why not to be with the profitable stocks? So this is what they think, the public and crowd. Now, so the people here are buying heavily here. In this, as you can see, they are buying here. Now, there are other people here are selling heavily. Who are they? Who are these people are selling here? The people are buying and the other are selling. The reason for selling is that they can get better than $55 for a share because they bought it here at $20. So, what did happen is that since the stock is going up heavily, from 55 it goes to 60 in few days because the people are buying. Those guys are selling until those public, they have no money to buy anymore, and then the stock will be going down, and down and down and down. And those people, or the public who are naive, they don't know, they hold for the stock, and the stock is going down, and they lose all their money. But understand, those people who are selling have already paid these guys to say that the stock is good. This is the trick that most of the people, they don't understand. The media doesn't speak just for the sake of speaking. There is something behind, either money or some people who have interest, or they want just to attract people to some investment. All this has to be paid. That's why the people, they put ads. Why the people, they put ads about whatever? It's just to attract people to buy. And this is what it happened in the market. If as you can see, so understand, when the stock is going down, there is a selling. There should be something before that makes the stock go so good. And you can see it in many stocks. When they go down, you see that this before, it was so good. And the public, or the people, or the beginners, they don't know what's going on. They don't see that the stock was 20 in 5 months, or 5 months and a half. You should buy from here, from the beginning. You don't buy at 60, or 55, or 57, because the trend is ending. And this is the problem that most of the people don't see. Okay, let's see if you have some questions. So please bear with me. I will just see what the people are saying. Wiseman said the public knows about the uptrend when the train is almost at its last stop. Yes. Yes, this is correctly what will happen. And I will tell you something that most of the beginners see. If you are a beginner, if you like to buy a stock when the trend is big, that means you are a real beginner. Okay? That's easy. But the problem is that most of the beginners, when they want to buy, they need a proof that this stock is doing good. And this is the problem. Okay? This is the problem. In stock market, you should not need a proof to buy. You buy when there is the momentum to buy, you buy. And then you see if you are right or you are wrong. No one is buying because he wants to be sure to make money. No one is buying like that. Now, I'm speaking about professional people. I'm not speaking about beginners. For me, when I want to buy when the stock is hidden. Okay? The beginners, they can't see it. But I buy at that time. I buy at $20, $21, 23. It means at the beginning. But I don't buy when the stock is 60 and I see 6 months is going up. Okay? It means I'm at the end. So you told me what you should do. I find another stock at the beginning. Why should I go to a stock that it is ended or nearly finished? It's just because you see the trend. And this is the problem. If you see the trend, it means that the stock is ripe and it's the dead end. And the stock will go down. That's why I told you the stock is running. It stops running one day and then it's going down. This is what happened to most or to all stocks. Let's continue with the questions. Like Bitcoin, yes. Bitcoin was going until I think 19,000 or 20,000 for 1 year or two. It was going so good, but the people they don't know about it. Okay, they have no idea about it. It exists. Even me, I am not interested in those things because I don't understand them. Okay, I don't understand why they go up or why they go down. That's why I am not going to do a business or to throw money in it where I don't know who are behind this thing. Okay, I don't do. That's why I made some videos just explaining the thing, and that's it. Now, James Armstrong said, yes, that's what happened with a lot of cryptocurrencies. The public buy blindly to the media influence. Yes, that's true. That's true. Let's see another questions. James Armstrong say, by that time it's already too late. Yes, but you know, some people they day trade these currencies, so they don't care. If they go up, they buy long. If they go down in a few minutes or 1 hour or two, they go short. So they are day trading. So it doesn't matter for day traders where the market is. It means if it's going down, they short it, and they use the currency pairs. It means you are in forex. There are two things. Either you buy a Bitcoin to go long, so you buy it as cash. You buy, for example, one Bitcoin. It's $10,000 or $11,000, and you think that the Bitcoin will go long. This is like investing. You can't go long, go down with it. No, you should go long. If you want to, for example, to do forex, it means day trading, two currencies like Bitcoin against the dollar. Here you should either go up or go down. Okay, so this is for day traders, and we are not. Six Coins said those people are the ones without a stop loss and a lot of hope. Yes, you just buy something and you hope that it goes up, and the problem is that when it goes against you, some people, they stay and they lose a lot of money. That's why we have TVs. NASA said, NASA said, that's why we have TV. Yes, TV, understand. For those who don't understand, TV is for entertainment. It's not for business. Don't take information from TV and you think they will help you doing your business. They are against you because all is ads to other people's profit. So if you follow them, most of the time you will be losing money because they give you the wrong idea or the wrong thing. They say this is stock, but understand that what they say is correct. It is a fact. If they tell you, for example, this stock has gained 300 or 250% profits, is that true? Yes or no? Yes, it is true. They speak about the past. Okay? And you have the idea that the stock will go 100%, 200% in the future. And this is wrong. Because no one knows. So this is the problem that the beginners, they don't understand that they are speaking about the past. Not the future. The future, it is another thing. Okay, so that's Rada Kistran Rada said, well said about the media. Yes, and understand that the media is all about the money. Why we have TVs? It is to advertise for us. Okay, to advertise, it means whenever there is a movie, you watch a movie, and each 5 minutes they stop you and they give you an ad, okay? Because they see you are watching the movie and you're following it. So if you respond to the ad and you buy something or you get interested in it, this is how the media get their money. So that's it. So understand that the media, when they give you the information, it is a past information. It's not a future information, especially about stock market. If they tell you, oh, this year will be a crash or it will be a bull market or a bear market, this is just ideas in the future. We will never know until we see them. Okay, Trump said, why most of mutual funds don't match market? About 96 of them. Okay, Trump, I will explain about the mutual funds right now before we go to the other oh, okay. Let's answer this question and then I will go with you, Trump, because I need to use and to explain a diagram. So Iqbal said, what is the name of the course in your library to screen stocks and how to buy it? Which software you use, FinViz or some other stock? Yes, it's let's say here, it's called How to Search for Stocks using Stock Screener. So I will just give you this. It's training level 2. So it is called How to Search for Stocks using Stock Screener. There is another one. This is training level 2. Okay, a training level 2. You can get them if you do the subscription. You get 4 training for free. It's better to do subscription than to buy. But if you want to buy one, it's okay also. But you need. There is another one which is how just to give you this. So how to search for stocks using stock screener, and there is the second one, how to search for stocks using industry index. This, if you want to compare, which is training level 3. This is if you want to, or you can do what we call silver subscription. Okay. Let's give him this information. And Iqbal, the best thing is you can send me an email if you have trouble getting all this, please, because okay. So let's begin with what Trump has said. Trump has said why most of mutual funds don't match the market, about 96 of them. Okay, let's go to the explanation and explain to you. Okay, now let's go to the explanation. Okay, now first, now mutual fund, okay, to understand what they do. Now mutual funds, let's say we have 1, 2, and 3. Okay, so these are mutual managers, what they do. Now one of them, he buys stocks from all the sectors. Let's say drug sector, he buy one stock. Bank, he buy one stock. It's like this, okay? All the sectors, he use all the sectors and try to find the best. He wants just to have, okay, to have all the sectors in his mutual fund. The second one, he chooses only, let's say, 3 sectors. Okay? Now there is one who uses only 2 sectors. Okay? Just this, let's say this uses 5 sectors. 5 sectors, 2 and 1. And this is the whole market. Now, in terms of percentage, this he gets, let's say he gets 10% this year or last year, let's say 2017. Now this, he gets 25% because the 5 sectors that he use are, most of them are good. Now this, he has 2 sectors, okay, 2 sectors, let's say he has 55% because these 2 sectors were so good, they were excellent in terms of movement. Now this is very good, okay? Now this is average, he doesn't get that much, although the market, okay? So as you can see, this is in a good year, okay? This is in a good year. Now even if it is a bad year, okay, let's say this, he got 10% down. Now this, he uses 5 sectors, and these sectors were so bad. They were so bad, these 5 sectors. So he will get, let's say, 55% down. And this, he got 55% down because these 2 were the worst. So here it is the worst sectors he chooses, and he lost 55%. This is the this is bad, and this is he didn't get that much loss compared to those. So from this comparison, I'm telling you that it depends on the managers what they use, because the managers, when they want less risk, they will buy everything. They will buy indexes, they will buy everything just to have the average. He's not concerned to make more money. Now this is, the risk is higher. The risk in the market is higher because he uses just a few sectors. Now this is the highest risk. Now the highest risk, okay, either you have excellent money or you have the worst thing in the market, because you are going with high risk. This is you go with medium, this is you go just with the average. So understand, you can be a manager. I'm telling you right now, let's say 2018, you can be a manager and you can use these three, 1, 2, and 3. Either you buy a lot of stocks from different sectors. You can buy even ETFs. ETFs, it means each sector you buy ETF, which gives you the average. Okay, in order to have the average each year. Or you can buy, for example, 5 stocks and you put all your monies there. Okay, and you stay until December and you see what you get. Or you buy 1 stock or 2 and you stay at the end of the year. So if you buy 1 stock or 2, this is the highest risk, this is medium risk, and this is the average. And I hope Trump, from this, you get the idea how things work. So mutual funds, it depends on what they buy from the market and if the market for them is good or bad. This is about the market. They don't know. Understand that mutual funds, they don't know what the other mutual funds have been buying. If they know and they buy only one sector, well, what will happen to the market? The market, one sector will be so good and all the sectors will be bad. That's why each manager thinks alone. He should come up with his stocks, with indexes, with bonds, with whatever, in order to make his portfolio resist and become good and is going up each year. This is what is their goal. Okay. Now, Trump said, which events we must avoid buying stocks. Now, I will just tell you one thing that it is for sure about the events. Okay, let's say here. Now, let's say you buy a stock today, $20. Today is, let's say it is 24 February 2018. Now, you know here at March 5th, 2018, there is the earning date. This is the date that I will tell you that it is very important for some stocks, not all. Earning date. Let's say after the market close. After market close, they will announce, the company will announce the earnings, which is called the quarter earning. Quarter earnings. Now, so from 24 February 2018, you buy the stock. Either it's going up or going down, it's not important. Now, the earning date is very important for some stocks, not for all of them. So here, here you have two choices. Either hold, then you have big risk. You have a big risk. Or you sell to avoid the risk. So, if you ask me what you should do, well, you should do whatever you like. So it's not up to someone. It is up to you as a trader. Okay? It's up to you. Either you hold for more risk, but understand that this risk, sometimes it is good when you have a gap up, you have a lot of money, you gain a lot of money, but you can get, on the opposite, you get a gap down and you lose a lot of money. So it's up to you. Either you hold or you sell. This is one thing that we know, but sometimes there is another thing I want to mention here, okay, is that we have national or international events. This, okay, this you don't know about them. Okay, so you would never know when they will happen. So when they happen, immediately you will see the result in the stock. Either the stock goes up or the stocks go down. So this risk you will never know. Okay, so it's something that comes very quick, and most of the time these events, if it goes before the market opens, before or after the market close, it's very hard to exit after market close. So it's very hard. It's very hard to exit this trade. Before or after market close, it's very hard to exit. So it's better if you don't like events. If you don't like events, you should do day trading. Is better for you because you are scared. Okay, and the stock market, if you are doing a swing trading, or you are doing investing, it's good to to do these events, because you will never know. Sometimes it is good, you make money. Sometimes it's bad, you lose money. But it's better to be a day trader where you don't see these events in your, especially if they are before or after the market close. This is what I want to say. Hope this question answers your questions. So let's see what the other people are saying. Rijas Chandros say, "Sir, please talk about level 1, level 2 data. Thank you." Oh no, see, Chandros, level 1, level 2, I will give you an idea, but this is for mostly is for day traders who are professional traders, and they use that. But for us, we don't use level 2. We use only level 1. So I will just give you an idea, Chandroth, before we go and see another thing. Okay, so let's go there. And okay, now level 2, what we call level 2 and level 1. Level 1 is when you have the bid and ask of a stock. let's say the stock here is $20. $20, 1 cent. This is the level 1. They show you the best ask and the best bid for you. Now level 2, they give you a lot of bids and a lot of asks. It means all they give you. Okay, let's say here, then here they give you $19.99. Here they give you $20. Here they give you $19.98. Here they give you $19.19. But understand that we, as in swing trade, we use this. Swing traders, we use just the ask and we buy here and we buy. We are not concerned with all this stuff. Now level 2 is when you want, for example, you want this price. Okay, so you put this price. If the stock goes down to this, you will get this price. Okay, so it's up to you, because right now the best is here. If it goes down, the stock is going down, it reached this, you buy. It's just because you like to buy on this, you don't want to buy on this. So this is for day traders. Okay, so day traders, because you have a lot of techniques to use in order to, because you are always here we speak about cents always in a day. Most of the time is cents. It means what you get from the stock. Let's say the stock goes from today from $20, it goes to $20.25. So you are looking for this 25 cents to get it. You can't get 25 cents because it's beginning at the end, but you can get, for example, 20 cents for each share you bought. So this is what we are looking for. But for us, we are not looking for cents. We are looking for the trend. From $20, it goes to $60. We are looking for $40 for each share. So do you understand now the difference? So we are for the long trend. We want big money when we stay longer. But these guys who are day trading, they want cents each day. So this is the difference. So that's why we don't use what they use. That's why I told you always, day trading and swing trading, they are so different. Okay? So let's see what the other people are saying. So this is about Chandroth. I speak about level 1, level 2. Someone says, Trump said, which IPOs mutual buy technology or buy technology? Which IPO mutual? No, the mutual fund, they buy whatever they choose and they buy. Okay? So if you tell me they have bought before, understand this you don't know. Mutual funds, they have already bought before even the IPO comes. Okay, I will, Trump, I will give you an idea before we go. Okay, let's see. So there are a lot of questions. So let me explain this for Trump. Which IPOs mutual fund buy technology or biotech? Now, why you say technology or biotech? In the whole market, we have all the sectors, and the mutual fund, they buy all the sectors. I told you before. So I just give you an idea before we go. Okay, let's see, I give you an idea. Okay. Here, when the company is private, the company is public. Public, it means when it goes public, it means everybody can buy it, which is the IPO. Now, private, we have just few owners. It means the people who own the company are few. Now, sometimes they ask money from mutual funds. Okay? So mutual funds, sometimes they buy companies when they are young, but most of the time they are successful. Because, for example, I give you an example. Now, Facebook, for example, when it was private, they have maybe few owners, maybe they have few mutual funds. They are helping them to become the company becomes big. Now, when they buy the price as cheap. Let's say the stock is $1. This is where they bought it at $1, millions of shares. Now, when they go to the public, they have virtual shares, okay? They have virtual shares, and they are millions of shares. Let's say the market gives them $10 a share. Okay, so mutual funds, they buy at $1, now it's $10, so they have 1000% of their money profit. And then in the future, other mutual funds managers, they buy this stock at 10 or 12 or 13, and then it goes up, and now it's $200. Okay? From $10, and here it is $1. You see, from $1 it jumped to $10, from $10 it goes to $200. So here we have mutual funds, but here we have few. When the company is private, few people get interested in it. But when it goes public, everybody can buy it, even mutual funds. This is what I want to say. Now let's see other questions. Okay, let's see. Were you a teacher in Algeria? Yes, I was a teacher. Yes, I was teaching. Why do mutual funds hide in the market? They don't want us to know where they buy. Okay, here is a good question of Up Ventures, and he say, why do mutual funds hide in the market? They don't want us to know where they buy. This is a secret of the business. Okay? Because it will be easy for anyone to make money. If mutual funds, they say, oh, tomorrow we are going to begin to buying Bank of America, for example. All the people go next day and begin to buy, and you see a spike of the if they say, for example, here, let's give you an example. The thing is, the whole market is a secret. No one will tell you where he is. Now, when they tell you where he is, it means there is an intention. Okay? Right now, for example, if you go to stocks, I will just give you an example. Okay. To show you this. Now, if you go to, for example, let's say Facebook. Now you go and you see the big holders. It means the big holders, it means the big mutual fund. You will find them named one by one. Okay? These are the mutual funds they buy. But they have already bought before. Let's say the stock was 1555 in 2012. This mutual fund, they begin to buy here when the stock was 1755. And from 1755, it goes to, let's say now to 180. I didn't see the stock. Okay, 180. Now this mutual fund, they buy bit by bit, small by small, from 2012, and they are buying. Some they come early here, some they come here, some they come here, some they come here, some they come here. Okay, and these mutual funds are buying. So no, if for example a mutual fund buys here, and the stock is going down, this mutual fund will lose a lot of money. And this one lose, this lost money. Those here, the three here, they win. Okay? And then if the trend goes up again, some mutual fund will come and buy. And they will make more and more money. This is how the market is done. So a mutual fund will never say, because it's against the law to say to you where he is. But when he has a percentage, more than 10% of the company, I think more than 10%, they will show you the name of the mutual fund or the broker. Because the broker, when they give you a name of a broker, it doesn't mean that the broker, he has 10%. No, it's the customers who are there, who has customers. It could be mutual fund, it could be a hedge fund, it could be an investors, it could be anything. But they just give you the biggest holders and how much they hold. Okay? So this you should just have an idea and understand. Now, this is for App Adventures. The other question, hello, what are your thoughts on Robinhood as a platform? What is the catch? Brian Loveless. So he asked about Robinhood, what is the catch? Now, what is your question? So Brian Loveless, can you ask a question? This, when you say what's the catch? The catch of what? I don't understand your question. It is a broker. It is an app that you can, it's very easy to use it in your cell phone. And that's it. So if you have a question, please ask direct question, because I don't understand what you mean. What is the catch? Thank you very much, Brian. Hopeless. Hello, Rahmatullah Modi. How are you? Brian Hopeless. Is it really free commissions? Oh, okay. I see the question. Loveless. So I will give you an example. And I will let you just think about it. Okay. So let's say we have, this is free commission. Okay. And this is flat commission. It means, let's say it's $5 buying or selling. This is a flat commission. Now you ask, this is the question, free commission. You ask yourself why. I will not answer this question because you should search it. Now, let's say this app has 50,000 customers. Okay? If they give you free commissions, how this broker will make money? How the broker will make money? I will not answer this question because how this broker will make money, because you should search and find it by yourself. I can't give you Why? Because you need to search long to find it. Now, a flat, they give you first the bid and the ask. Ask yourself, does the free commission gives you the bid and the ask? Okay, the bid, the ask, it means where you buy, the ask where you sell. You should know these two information. Here where you buy, here where you sell. So you should understand, they should give you, all the brokers with a flat commission, they give you this. Ask yourself for the free commissions, do they give you the bid and the ask? If they don't, ask why they don't give you. Do they give you all the stocks in the stock market? All stocks in the stock market? Here in the flat commission, they give you all the stocks that exist in the stock market. All of them. All. Now here, free commission. Do they give you all the stocks? If they give you just few, why is that? Now, if you can answer these two questions, okay, you will get the answer in the future. Okay? And please, you can, okay. So I'm sorry. I was explaining without giving you the information. So as I told you, free commission here. Ask yourself if, for example, this broker has 50,000 customers. It means you apply for the broker and you have an account. Let's say they have 50,000 customers. You are a customer. How this broker will make money from you? Because the broker will make money from you. If it doesn't make money from you, from where it makes the money? And the second thing, the bid and the ask. Does this free commission broker, does he has the bid and the ask? You ask yourself. If they don't, ask yourself why they don't have bid and ask. Because bid and ask are very important to know where you buy, when you sell. Okay? If they show me just the ask and they say it's $20, but the sell is only 19, it means he will take $1 if I sell. So you see the difference? Now, if this free commissions, they don't give you the bid and the ask, it means there is something problem. Now, second thing that you should see is all the stocks. It means a flat commission, a good broker gives you all the stocks that you should buy. Wherever you put a symbol, you should buy it. But here, do they give you all the stocks in the stock market? If yes, it's okay. If it is not yes, you ask why. Okay? So this is why I mentioned those two or three things. So let's hope, Brian Loveless, you have an idea, clear idea why those guys, they give you free. In business, a broker, when he gives you something free, it means there is something behind. There are some brokers, for example, they give you, let's say, 60 free trades when you open an account. Yes, this is like a bribe. They bribe you, which means they say, okay, I will give you 50 or 60 trades for free. It means the commission, because you be a customer with us. This is why they give you free. But most of the time after that, it should be money. You should pay these commissions in order that the broker will stay in business. Because if you don't pay, why they open this broker? They don't do charity. Understand that the stock market is not a church. You don't come to the stock market to ask for charity or to ask for easy money. Okay? You are in the church and the people, they come to you and they say, oh, give me money, it goes to God. Okay? So here, the stock market, there is no money that goes to God. Okay? It goes to the people. So let's see. So Brian say, NASA said there is no free lunch in the market, so there is cut somewhere. Yes, NASA before, when this broker just began, all the people, they ask for this broker. But for me, I get invitations and I don't open an account, because from the beginning I know that there is something behind. So I don't play this game. I don't play with this game, because if there is no commission, the broker will take money somewhere from me elsewhere. I don't know how, but he knows. Okay, this is just a trick. This is a business trick. So I don't want to go with someone that doesn't show me directly what's going on. Okay, so let's go to another question. What political events drastically affect stock trends? I don't think that political thing. Sometimes they say the market goes good with the Republican Party, and then the stock goes down with Democratic Party. But I don't believe in this, because if you go and you check the stock market, you will see different idea and different things. So it has nothing to do with politics. Stock market, it has to do with money. Everything is based on money. Okay, so it's not this idea of money that we are speaking about. Okay, let's go to another. Let's see here. Sorry, I'm going one by one, because please, the link to your website isn't working. Why is that? Please, let's say here. Please try again, or send me an email. It's Djellala.net. Try it again, please. Let's see. Now it is working for me. I just put it. It is working. There is. Try to see again, man. Maybe you have a connection, or you have a problem in your thing. Try it again, please. Yes, it is working. I don't know. It is maybe he has connection problems or something like that. Thank you, Rijas. Thank you very much, him. Maybe it's just my computer. Yes, it is. I am using Safari. I don't know about Safari. I use Chrome, and I use Internet Explorer. I use the other one, Firefox. I haven't used Safari yet. Why a lot of stocks repeat the same patterns? Now, these are not patterns. These are the trends that we are following. Because a pattern, you think that it is the same, but it is not the same. Because the stocks, they don't trend the same way. Because the traders that are there, they are different. That's why you see difference in trends. And this is, I will explain, because we said about this before. Trump said, why most of IPOs sink before start going up? It's common pattern, or the 400 or 300 gains come a few stocks after an IPO. So this is not true. Sometimes some IPOs sink because these companies are not so good. The people, they give them money at first. It means they buy them because there is a lot of advertisement, and then they go and sink, and they will never go up. But some you should wait 1 year, 2 years, 3 years, 4 years until the mutual fund, they see if these companies can resist and can make money. Okay? So mutual funds sometimes are not going to buy right away. They should wait. So if there is no big buyers, the stock will go down. But there are some IPOs, they go so good from the beginning. I think I have seen before so let's see, for example, this chart of MasterCard. So please just watch with me. Okay? So as you can see, MasterCard Incorporated, from the beginning, let's say here, let's say we take the yearly. It opens at 4, it goes to from 4 it goes to 10, and after 10 it's going up, as you can see. So here where the mutual fund begin to buy, and then if it is doing so good, a lot of mutual fund will begin to buy and to buy and to buy, and you see each year this stock, or it is MasterCard, as you can know, is going so good. Okay, let's see the Visa now. Okay, Visa is the same thing. Okay, from 14 it goes to 13 the first year, it goes to 22, it goes to, and then it's going up into the thing. Okay, this is just to show you that it depends. But if I show you right now, let's see here, if I show you other IPOs, so bear with me. You see? Now check this one. This is called AXN. It's a company in drugs, in drug manufacture measure. So the stock here at the beginning it goes to 11. Now it is 12 cents. So it's not all the companies IPOs they do good after. Well, your idea is false. It's not all. See, IPO, the stock was $7.65 in the past, $7.65. Now it is 19. See, the stock here was okay. This TENX, it was $154.80. Now it is 25 cents. I will stop until here, because you see how company, how they try to push it. It begins with $150 as an IPO, because they think that this company will become the most important company maybe in drugs. But later they sell, and now it's only 25 cents. Okay, so let's go back to see the questions. So as I told you, always don't make generalizations. Even if you read something online, when they say an IPO, which years? Okay, because if they speak about 10 years, it doesn't mean it's the same result as 20 years or 40 years or 60 years. All is different. When you change the date, everything will change. So this is a matter of calculations only. So people, they get influenced by the data, but the data or the information will change when you change the dates. Okay? Let's continue. So Trump said, why most of professional traders wait consolidation close all the time high before buying IPO? I don't see. Trump, I told you in my search 2 weeks or 3 weeks ago, I show how to buy an IPO. What you say consolidation and something, it doesn't mean nothing. If you don't know how to search, you can't make it. IPO or another stock, because all become normal stocks after a few years. So what we call by consolidation is just when the stock is not doing nothing. It's going up into a range, trading into a range. This is what we call consolidation. But the people, they don't know exactly. The professional people, they know exactly where they buy, as I buy. Because there are some techniques that most of the people, they use. Although I don't know the people, okay, how do they enter and when? But I know that in my day, that when I buy, most of the people, they buy. Because I see it. I see it when the trend began, and I see the trend going up and up, up and up. It means that I am right. So there is another question about Adolfo Del Rio. You look like your name is Italian, but there is no problem. If I am in an uptrend stock, what is the best way to get out before the largest sell? So, Adolfo, this you see it in training level 7. How to follow an uptrend. I give you techniques, and there is a stock that it is 5 months and 2 weeks live. Each week I do a video about stock, and I say 5 months and 2 weeks. You can check that. Stock live, and you see what I did, and you just follow me by my techniques. So if you are really interested, you can go to training level 7, and it is called how to follow an uptrend. Or you can do golden subscription, and you can get 10 training for free, and this is the best thing you can get. Okay, so I'll just have this for you guys. Okay, so please check this, and this is the website and the email. You can go there and you can check that. Alfredo, you can check that, and if you don't know what to do, just send me an email, please. So this is for Alfredo, the website, and the it means there are techniques. It means when the stock is going up, you should follow it with some techniques. It's not patterns or something like that. There are some techniques that I use always, and most of the time I exit on time. This is what you should do, and you need to learn and you need to practice. Brian said, I can't see what you are writing. Yes, when I write it, it goes below the chat room. Please send me send me an email if you didn't see. This is my website and this is the email. Send me an email and I will Brian Loveless, you say, I can't see what you are writing. Please just write back and ask your question. Nazar said, Robinhood, it is a marketing gimmick. Yes, everything there is marketing, okay? In any business there is marketing. They do a lot of stuff and they come up with an idea that you don't pay. So ask yourself, if you don't pay a commission, how this broker will live? It means, how do they do business? From where does he take his money? Okay, so this is the question that you should ask, and you should go and see. Let's see here. What is the question? No commission, but you pay somewhere else. Yes, you should pay something else. Brian Lovelace said, thanks. I am trying to find a cheaper broker. I was excited about Robinhood. Now I will focus on Just to Trade. I can't find Option House. Now, Just to Trade, I'm telling you something about it. Before I have an account, but the execution is so bad. If you are buying for long investment, it's okay. Because the execution is so bad, because I think the price is $2.50 at that time. I don't know when I have an account with it. Okay, so Option House was bought by E-Trade, but now it is more expensive. It is $6.95. So E-Trade, there is no Option House right now. When you put optionshouse.com, you will get E-Trade because they bought it. And E-Trade is more expensive, I think. You should find another thing. Another question about Modi, Rahmatullah Modi. He says, what is a hedge fund? Okay, let's give an explanation. Now, hedge fund manager. Okay. Now he is a trader or investor and he makes a fund. Now where he got his money? He get his money from the rich people, rich and wealthy people. He doesn't accept poor people. Most of the time are rich people, wealthy, famous people. They have money. Now, for example, a hedge fund manager, let's say he asks, just an example, okay? He asks, for example, $1 million, and his fees, he will take 5% at the beginning. This is his management fees. And let's say he take 45% of the profit. Okay? Now, if this hedge fund managers, he make profits, he will take 45% of the money, of the profits to himself, to this manager. And he take 5% at the beginning for management fees. Okay? So you ask yourself, why these rich people they give? Because he will go long with stocks and he will go short. It means he sells short stocks, selling short. Understand that a hedge fund manager, he can sell short stocks. He can do whatever he wants. Okay? So mutual fund, he can't do selling short. Okay? So that's why the people, the rich people, they give him money if he succeed. But let's say he let's say he fails, who will pay the losses? The losses is on the rich people, okay, not on the manager. Manager, he doesn't have any loss. He has only, he works, he chooses the stocks, he do his job. If there is profit, he will get his profit. That's it. This is what he do. Now, if there is a loss and this rich person wants to withdraw his money, he will withdraw his money with the loss, and that's it. This rich has gone. If the other people stay, okay, it's their problem. So this is what's the difference. What is what we call a hedge fund. So let's see what the people are saying. Hello, Kilda. Hi, Wanda. Alabama, just joining. Are you called Wandra or what? Because I see Wandra. I don't know who is Wandra here. Okay, so let's continue. NASA said, how much you pay interest if you hold for 5 months or more? Some brokers may charge a lot. No, I don't. I use only my money. I don't use margin in my long trades because I don't want to give a percentage. Some they ask 6%, some they ask 5%, some they ask 2%, some they ask 10%. So I'm not giving them any money. So I will use my own money. I don't use margin. This is what I do. Kills say, what is the difference between futures and swing trading? No, the futures is just the products that you are. Let me explain. Let me explain to you what's the difference, because this could be something. Okay. Okay, so you trade. You trade many things. One, you trade stocks, companies. It means any company that you can do forex, which is about currency pairs. Like, for example, let's say euro against the dollar. This is forex. You can trade options contracts. There are calls and calls and puts options. You can trade futures. They are contracts. You can go up or down with futures. They are contracts. So swing trading has nothing to do with this. Swing trading is different from day trading. So swing trading, you can do swing trading with stocks. It means what? You follow the trend. You can do it with forex. You go follow the trend. Options, you follow the trend. Futures, you follow the trend. It means you buy something like, let's say $2, it goes to $10 for all of these. Okay? So this is what you trade: stocks, forex, options, futures. Now, swing trading, we have day trading and we have investing in the stock market. You can do one of the three. Day trading, it means you day trade, you buy and sell stocks daily, forex daily, options daily, futures daily. Swing trading, you follow the trend. There are trends in the market you should follow. You should stay longer. Investing, you stay for many years. This is investing. Okay? So there is no relation with swing trading and futures. You can do swing trading with futures if you buy a contract and you take it long. You stay many days or many weeks or many months. This is depending on the contract time. So hope you get an idea about futures and swing trading. Is that okay, Wandra, for the explanation? Do you need to read the Wall Street Journal to be successful futures trading? No, see. First, Wandra, I will tell you something. If you are a beginner, don't do futures, options, forex. Stay away from them, because they are risky and you can risk all your money and more. So don't do this thing. Now, Wall Street Journal, it gives you information about the past. It has nothing to do with the future. So you should read, you should find a strategy to do day trading. So I see you are interested in futures, but futures are so risky. Okay? Any move, it could be thousands of dollars. Any few hours, it could be $2,000, $5,000, $10,000. You lose or you win. So it is not for beginners. So this is my idea. Stay away until you understand in the future. You begin from stocks. This is what I do. You begin from stocks, like swing trading. You buy stock, you hold it for many days or many weeks or many months. You try to begin with the easiest thing, and then if you are good, you can go to futures in the future. And you should do day trading, because futures is traded the whole day. Stocks, it's not. Okay. So Brian loves, what is the best brokerage firm right now with the cheap commissions and great execution? I don't know. You should search. You should search. There are a lot. You should search, and you should see what the people are saying, because most of the big brokers, they have good execution. Okay. Smaller brokers, it's when you buy and then you see that it is too long. That's, you understand that it is bad. Thank you very much, Wandra. Thank you very much. Wandra, you can see, you can go to my website and take your first training. It's for free. Training number 1, it's for free. And you just begin at least understanding what we are doing. There is a first training for free. You click it, it's free. You just get it. At least you understand what is my strategies and how I work. And then if you are interested, you can do subscription, or you can do order other training. So as I told you before, since it is our subject, how to follow the trends, I just give you an idea. So Chris does me say, hey, my wife is listening. Can you greet her and say hello, Maui? Hello, Maui, how are you? And hope you are doing very well. Hope you are doing very well and you are listening to me. Yeah, you can as you can see, Chris de Guzman, you can send me messages by Facebook, or you can watch whatever. This is just a live for all the people who are like they want to ask direct questions for live streaming, and that's very good. Thank you very much, Chris, and hope you are doing so good. It's too late right now. I don't know what's the time you have there. So let's go and give you an example of what we call trends. That the trends are not the same. Okay. So a stock, for example, it goes like this. Another stock goes like this. Okay. So another stock goes like this. Okay. So these are three trends. 1, 2, 3. This is easy trend. Okay? This is medium. And this is difficult. So, in order to get all these three, you can use training level 7, how to follow the uptrend. I give you some ideas, some techniques to use in order to overcome all these trends. Sometimes they are so difficult, so you should get used to that. Now, if we go to the chart, okay, let's go to the chart. Let's say we go, if we can find options, mutual funds, mornings and groups, summary, forex, exchange, Canadian, the component, let's see here. Okay, this is, I will show you some trends right now. Okay, look at this trend. This here at the beginning here, all this is called easy trend. Boeing Corporation. Now this, it's medium. They are not the same. You see the difference between this and this. They are not the same. This is medium also. It has some trouble. This is good. This is medium because sometimes it goes up, sometimes it goes down. Apple is also medium. McDonald's, it's a little medium. Though this is easier. The Caterpillar is easier trend. IBM is bad. As you can see here, when it goes up, it is bad. You should have very great skills to stay in this trend. This is also, it is so difficult. This one also so difficult. Difficult also. Easy. You see how this Visa stock going up so easy, and it's not a big deal. It's easy, it's good. This one also, it begins easy but go medium. This is difficult. This is difficult. Here it was medium, but it goes back and forth. This is better. This is medium, and it's good in general. Microsoft is good, as you can see the trend. Okay? If you go to Boeing, you find Boeing is so good. Okay? So good. If you follow Boeing from the beginning, you will have made a lot of money. So these are some trends that we see, and they are not so easy. NASA said, any idea how much beginners are losing in the market? Or probably billions. Understand that each day billions of dollars are lost, okay, from beginners. All these billions goes to those who have a lot of money, because they will make a lot of money, because they know what's going on. But even the bigger hands, they can lose money. But it's not like beginners. Beginners, they lose because they don't know. But professional trader, when they lose certain money, this is a probability that they have in their plan. They know that some stocks they lose money. So it doesn't mean that a professional trader, he chooses a stock, it means that he make money. Okay? So it's just about the direction where the stock is going. If you buy a stock and it's going up, you will be making money if you don't exit early, if you know how to handle that. But the problem is that when you don't know what you are doing, you just buy and then it goes down, you sell. Sometimes you don't put stop loss, you wait more and more, you lose, then you buy another stock, then you go to another forum, then you go to Wall Street guys in TV or analysts, and they say, hold this stock, it's good company, and then the stock sinks and you lose a lot of money. That's why it's better, the best idea you can do, okay, is you understand the whole picture. You understand the strategy, you understand techniques. Let's see a question about Brian Loveless. Why does your chart look like that? I have the update version and it's full of colors and very confusing. See, Brian Loveless, there is a free training, okay? I will put it now in the in this. Let me get this free training for you very quick, and you will see it. So just give me 1 minute. Okay, so this is the free training. Please go to it and sign up for this free training. It shows you how to do this free training. It's about the chart, and it will take all the colors that you see, because maybe you put indicators. For my chart there is no indicator, that's why it's clean. You can even change the colors, you can change a lot of things, and there is even a lot of lessons here. It shows you all this. Okay, so that's why my chart, if you can see, my chart is clean. But you can change, for example, the colors. Let's say here, let's see the, yes, you can change the colors for the candlestick. Let's say red, you put it yellow. Okay, you see here there is a change. Now the green, you can put, for example, white. Okay, so you can change whatever you like in this. But this is the thing I like always. So you should do the same as me. Opacity here, see, the stock will be lost. You can change also the candlesticks. You put, for example, a bar. So you see how the chart changes according to what, or put a line if you want to. But my strategies works with candlestick. That's why I leave it with candlestick. You can even change the background. You see that? You see how the chart changed the color? So that's why I leave it as a black. You can change a lot of things and you can study. So please take this training. It will show you everything you need. Thank you very much, Loveless. And please, Loveless, if you are not with us, you can take your first training for free. Okay, if you go to the free charts. Yes, if you want the first training for free, you get this link and you just go there, sign up, and you will get training level 1 for free. It's for free, you don't pay nothing. Just take a look at what we are doing, and then if you are interested, you can get 4 training as the silver subscription, or you can do the golden subscription, and we have 10 training for free. Okay, so thank you very much for watching. Please, if you have more questions, ask right now. We have done 2 hours and 5 minutes right now. So if you have more questions, please just ask. So before we finish, I wait for your questions. I will just show you the market, what's going on the market for the Dow Jones, just to have an idea. For those who have been following me these 2 weeks or 3 weeks, I make a lot of videos about how the market is moving. After this small trend here, there is a correction, and then the stock is going up. So we are waiting for this to go above the resistance line here, and then if it goes this, it means that maybe 2018 will be a very good year. But until that, we should see the stock, this Dow Jones, which is 30 stock average, goes above the resistance line. If the Dow Jones goes below this line, which is the support line, understand that we will have a crash. But right now we have only a small correction here, and now the stocks are going up. You will find that most of the stocks are going up right now in these 2 weeks. Most of them are going up. If you find stocks that are still going down, it means those stocks are bad. Try to avoid them because they may be bad stocks. Okay? So, Brian Loveless, he said, any discount on any subscription? Okay, I will tell you. Brian Loveless, if you take 4 training in silver subscription, it's only $25, and you get $500 value. It means it is so discounted. I can't put it more or less. Now the $55 a month, you have 10. It's around the $1,250 discount. Okay? So it is so discounted. So I can't put it more down. So if you want just to go slowly, you can order. For example, the first training is for free. For example, you study it. Next month you can do the other second training. Then number 3, then number 4, number 5, number 6, and you go for 1 year or 2 years or 3 years, and you don't spend that much. But it is better to do the subscription, because the 4 training, you get them right away, and then you begin to practice each month. It will be better for you, because I do a weekly search, I do lessons, and if you ask me questions about stocks, I will make videos and put them in the subscription. It's a lot of things that you get from this, and it is so discounted. I can't put it down more because it will be for free. Okay? So try just to make an effort and try to check, and send me an email if you need help, what to choose or whatever. So you can send me help. You can send me email. Here is my website, and okay, You can send me an email, or you go to the website and check what is good for you. NASA said, I have been practicing your strategy by using Finviz portfolio for 1 year. Your criteria works well. I was buying 50 stocks, $2,000, and I had a lot of winners. Yes, so you bought too much stocks. What is your account? Is your account so big to buy 50 stocks? I myself, I would never buy 50 stocks. It's too much. But it is very good if you buy one stock, you leave it for 2 months or 3 months, 6 months, and then you sell it, it's okay. For about what percentage does your portfolio increase each year from trading? So each year is different. Sometimes I get 65, sometimes 45, sometimes 50, 52. It depends on each year. So the portfolio, it doesn't work the same as each month or each year. And if I subscribe, do I have access to them anytime, anywhere? See, the difference between subscription. I will make it in this. At least you understand very clearly what do you mean. So to make you understand, okay. Individual training, okay? There are from 1, it goes to 20. I have 20 training, okay? Now, if you get to 10, this is the basics that everyone should have. The basics is 10 training. The level 1 is for free. Training level 1. Now this is, you hold forever. Hold forever. It means they are there on the Gumroad. This is where I have my the Gumroad website. This is where you have them. It means if you have number 1 free, you hold forever. Number 2, number 3, number 5, it means you hold this forever. Now, what about the subscription? Okay. Now, subscription for 1 month, you get all what you get is for 1 month. Now, if you stop, you see it 1 month because you pay 1 month. The second month, there is nothing. Okay, because you stopped your subscription. But subscription in value it is better. Why? Because let's say when you have the silver subscription, you get 4 training for free. Now if you get the golden, you get 10 training for free, and you got lessons. You get lessons, for example. You get the weekly chart, the weekly search. You get a lot of things if you are a subscriber. So subscription, it's like when you have electricity in your home. Electricity. When you are subscribed, you pay each month, you have electricity. If you stop subscription, you have no electricity. This is the simplest example I can give you. It's subscription. Okay? Now, if you buy individual, if you like this, it's better that you do, if you want to hold for many years, it's better to buy this. It's better for you. So, here, it depends on you. If you are going to study 2 months, 6 months, or 1 year, you study all the subscription, you have time, you take notes, and you begin to practice. When you are done and you are okay, you can just end the subscription and it's okay. But if you like to buy one after the other, whenever you need it, for example, from 11 to 20, you are not obliged to buy those because these are for advanced students. Advanced. You are not obliged to buy all those. You are only obliged to buy these 10 because you need them, because they are the basics. And hope you understand. Basics of my strategy is those. If you are advanced, you can do selling short, you can do buying from support line, you can do other strategies, investing, options, correcting your mistakes. All these are here. But if you need individual training, it's better to you do this here. You begin with the free. If you like the training, you continue. If you don't like it, that's okay. Okay. Or if you have questions, you should ask me questions. Adolfo said, I have $2,500 to start trading. What is the best money management advice for each trade? Now, see, Adolfo, the best advice is you divide your account into maybe 2 positions, 2 stocks, because your money is so low. And you buy penny stocks because you don't have money. You buy stocks that are cheap, $2, $1 or $3, because you don't have that much money. And this is all I can say to you. And you can divide your account into 2 positions, maybe 3, because your money is so little. You can't buy big stocks, and you can't buy that much. So this is the best thing I can tell you. Okay? So, as I told you, someone asked me before about the NASA. You have 100,000 demo portfolio. It means if you buy 50 stocks, it means each stock is $2,000, right? Yes, but in general, if $100,000, you put maybe 5 or 6 or 7 or 10. If you are buying penny stocks, the position should be smaller, because penny stocks are more risky. Okay, since they are more risky, you should put less money in them. Don't put too much money into a penny stock, because it can go good, you can make a lot of money, but it can go bad and you lose a lot of money. Okay, so we are at the end of this session. Please, if you have more questions, ask. For you guys, please send me, go to my website or send me an email. Okay, here is my website for you guys. Send me an email if you have question. Thank you very much, Brian Loveless. And thank you very much for all you guys. Always we have the same Saturday at 11 p.m. It's always we have this on Saturdays, 11 p.m. Please, if you have questions, send me questions and I will answer you. If you have a question about the training, just let me know. And I think this is the end of today. Thank you very much, Nasa, and all of you guys. And hope to see you on next Saturday. If you have questions, just ask me questions by email. I will be always here for you guys. And thank you very much, and good night.